Hello there, ladies and gentlemen. Karaoke Andi here, and I'm a little bit in a rush. I just came out of the gym, and I just see that I didn't even close my office door. Let's close it right now. You don't need to necessarily see what's behind that door. That can be a little messy. So, all right. Let's start with the disclaimer. This is no financial advice. Trading involves risk, and past performance is not indicative of future results. Always conduct your own research before trading. This stream and its recording is for educational purposes only. This stream is governed by the stipulations set out on the website tradertom.com, tradertom.com/disclaimer. Yes, and I've read that many times by now. So, today I want to do something special, and I don't know. I have done that, and it hasn't worked so well. Yeah. So I'm trying to trade the espresso in the Nasdaq using a 20-point offset. So those boxes are. So I've done that in the past without backtesting it, and then stopped doing it because I got a couple of losses in a row. But recently it just looks like right out of the gates, as the Americans say, that beast moves. So let's just try our best. Today is FOMC day. I expected range-bound markets in the DAX. Was holding off on the Skuran. Also, the signal bar was an inside bar, which usually screams anti. But it was not so choppy. Actually, DAX was really. This was the espresso here, right into previous session high. And then there was a clean move. Imagine you would have been short from here. I took personally a trade here. Just a little bit of momentum. And then look at that. Found support here or whatever. And now back to the high. So range, yes. Chop. Was some clean moves in between, right? So the UK index kind of sold off. I was talking about in the morning that on a daily chart, here's a high. The last all-time high came in at 10,938, and we just peaked above it. That means we made a higher high double top, and you can sell that. But of course, do you want to sell an all-time high? But some people were asking me about swing trading, and they have jobs, and I said, yeah, higher time frame, but how you do that? Okay, so sell that double top there on the daily. But do you want to really sell all-time highs? Maybe you want some confirmation, and that's where the fishing technique comes in. And then just for demonstration purposes, I took the tiniest of short here, but I will tell you about that a little bit later, and I have to get those orders in. So I want the Nasdaq. So short order, long order, screenshot. Espresso orders. As always, they might need adjustment last second. Nobody knows. 5, 4, 3, 2, 1. Let's go! Woo! I don't want to manage espressos in 2 markets. Oh, let's see. That's where that offset is good for, right? So opening volatility might break support. Otherwise, certainly looking left, there is some. Have to be mindful of that. Should we get filled short? Ah. In the US session, for some reason, I'm always flimsy. You know, maybe it's, can be that I had a more or less successful EU session and I don't want to piss away the profits, you know, and then your subconscious mind wants to hold off. Indecisive open so far. Bears more or less in control. Now poking in the lower espresso box. Testing support. Pre-market support. Dow also indecisive. Oh, looks like we get a fill. Ooh. I'm risking $60 on it. Looked like that almost got filled. Stand by. Hey, looks like we got saved by the bell. Woo! Guys, I will delete both orders. If nothing happens within 3 minutes, I will not switch to Karaoke Espresso. Reason being is that tonight is FOMC release. The markets might be in waiting mode. We have a very indecisive open, and so just out of curiosity, so 3-minute chart. It's the first 3-minute bar. So 2 points above here, the Karaoke Espresso would dictate along. Let's just observe where my crosshair is. Yeah, the high is 95.3 and this is 96.5, so we wouldn't have been filled. 2 points offset. Maybe the spread would have filled us, so we would be long now. Now definitely filled. Filled on regular espresso long. Okay. There we're pulling back to entry. This is where I probably would stop myself out, you know, because I'm so flimsy. And now there must be 100 points move. That would be classic Andi. The Dow hasn't filled shit yet. Excuse my language. think I need to put some research into the Nasdaq Espresso. Maybe the FOMC day is not the right day to try that out, but you know. So 95, so 97.3 went as high as 30. That's already over 30 points. If you risk 100, you want to maybe get 50 out of it. And we're going higher. Classic Andi. Okay, so yeah, so now the FTSE. I know this is the US session. You don't trade the US markets. So the point is that a gentleman asked me, or actually a lot of you guys asked me, a very sensible question. They say, Andy, we have jobs. And while you are trading the DAX and the Dow and whatever, how can we trade? What about swing trading? I was like, yeah, I mean, just trade a higher time frame, right? And use larger stops, smaller size, to keep your risk constant, right? And chart on a higher time frame. You couldn't tell if it's a lower or higher time frame if I didn't tell you, blah, 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 blah. So, and then I was just like, oh, yeah. So here's the all-time high, the all-time high from the 27th of February, came in at 10,938.3 on my chart here. So, yeah, you can sell that as a double top, right? Or buy a breakout. So let's say you want to sell that as a double top. You see that today the FTSE peaked above, right? Peaked above and made a new all-time high. Do you want to sell short an all-time high without confirmation? I don't know. I probably wouldn't. So that's where the fishing technique comes into play. The fishing technique is a technique developed by Tom. It's his technique, it's proprietary to him, and it gives you, yeah, what does it say? So if the market fishes above an old high or below an old low for stops, so to say, yeah, that's an opportunity for you to sell short. So the characteristics is as a double top that you have a new high that supersedes the old one. So you have that fishing above the prior high, which is that yellow line here on this chart. Fishing above for stops. And then the buyers here, they need to be trapped, right? So you need to see this here. You need to see a bear bar that closes below the bar that made that new high. And that works on basically any time frame. I believe Tom trades that, for example, on the 10-minute chart quite often. But I believe the higher the time frame, the better the signal quality. Yeah? So why not? If we want to sell a double top on the daily chart, why not use the 1 hour to time our entry? So with a little bit more confirmation or confluence or whatever rocks your boat. So I only observed that, and I on my phone, because I had that line marked there, and I saw this candle closing there. So I was a little bit late, but I got a better price, risking 60 points here. And right now looks like market doesn't sell off just yet, and also Yeah, do you want to sell an all-time high and tonight is FOMC? Yada, yada, yada. That's not the point. The point here is this is just an educational example that just happened to happen. So I use that to illustrate you how you can swing trade. So that is the bar that closed below the bar that made the new high. And you would ideally sell that on close. And I got in probably here an hour later or whatever during my lunch from my phone. That's why I took it in completely meaningless size, just to show you, to illustrate you, right? So far we were printing one bear bar, and then we had 1, 2, 3, 4 bull bars. This one's still 18 minutes to go, and we shall see. Yeah, stop loss is above here, needs to be here. A target would be the target. So now let's look. First target could be overnight low here, previous session low here. There's also some support here. Yeah. And when things really go down south, where the market came from, where did the market come from? And now I have to switch to a 1 hour chart, to a daily chart. Where did the market come from? All the way down here. So, however big your ambitions are, but if that works out, it would be a very nicely timed entry, I believe. But again, selling an all-time high. Today is FOMC. Blah, blah, blah. Still, signal is there. So that was just for me to illustrate how you can use entry techniques on a higher time frame to swing trade, and how that works. So, wow! Now I'm glad seeing this here, huh? Yeah, that's the chop that you expect on an FOMC day. So, what is actually? Oh, we're in the Dow Jones in a gap down situation. Okay, so let's see maybe together, because I haven't really had time to. I was very well prepared for the morning session, and since then I had a very busy day, and I had to squeeze in gym and a shower. So we are definitely gap down. There's only 2 examples from 2020 and 2021 where we have a gap that's between 0.5 and 1%, and we opened below, did we? Below previous session low. Yeah, clearly we did that. Previous session low was here at 52,425. Let's maybe take this out and have 4 examples. So, and looking at a 15-minute chart, this is UK time. So this is the opening 15-minute bar. This would be the school run signal bar. This would be an inside bar. if we traded the anti here, we would be frustrated, and here we would start to get happy. Here we would maybe be stopped out for 0 if we haven't moved stop loss and held into the release. It's a lot of ifs, right? So choppy chop chop. Okay, so bull bar, but small bodies, long upper shadows, not really. No bull close here above prior bar high on the signal bar of the school run. So, and there you have it. Choppy chop chop. Big bear bar, bull bar. And then, at least, you know, on the school run, on the regular school run, you would be rewarded. Came back to the high and made new highs of the day, and then but you know, points to be made. Here, those again, an example with 2 consecutive bull bars that where at least the single bar doesn't have the biggest of a body. It's almost an inside bar. So treating that as the anti could have made you very happy. So let's be careful for today. Well, in the DAX in this morning, so I took an espresso long. Here's the previous session high. I marked that down here. And so once that just shot violently up, once we were near there, I just exited for, I don't know, 47 points. That was quite good. And then I looked at similar charts for the day, FOMC day, but what does the DAX do? And looked also choppy and sideways, and then inside bar, and I was like, yeah, fuck that, I'm not going to trade that. And then look at this, pew. It's here, I took a position, but I was already probably later in the session, and I was already answering questions, so I took that by myself. I think I said that, but yeah, you see, exit wasn't too bad after that pullback, and we made a new low, and then we reversed back up. So you got your range bound market. Just it wasn't, after the third 15-minute bar wasn't as choppy as I thought it would be. Just a clean breakdown here, this tool here. And then here, when we finally reversed out of nowhere, then we also had some, just a clean move up. So double topped here, and now we are in a trading range. So clearly this is chop, complete overlap. So now the US markets are in charge. Enough of Europe. I believe I will close the DAX and the FTSE chart. Let's focus really on this. I mean, Nasdaq really opened where it closed yesterday. Like pretty much spot on. Neutral open. However, Dow very much gap down. So the aggressive screw run dictates a short position. I'm holding off. I will wait for the regular screw run. Even though, I mean, when you can't just overlook this here, right? Even though that's overnight and pre-market, but that looks weak, man. This looks, the markets look weak. Fucking hell. Aggressive screw run sellers would be very happy already, right? Or at least hopeful. Man. Need to do, probably I will need a much larger. So let's go 0.3. 90 points. 0.4. 170 points. Something like that we probably need. Or we need 200 points here. It's like a waterfall. So you expect chop and you get a clean breakdown. You see, that's when they say trade the market right in front of you. And now FOMO is real, right? I want to be in. I want to be in. I want to sell for any reason. I'm looking to maybe have a chance on the microstructure to here maybe. Selling the Dow. That was rushed. So shit entry. Okay. And selling the US tech. Nasdaq. Okay. So I tried to sell above prior bar high. Entry was good in the Nasdaq, was shit in the Dow. Let's see. Oh. So We have to trade the market right in front of us. But of course, market in waiting mode is what I have expected. So I'm still kind of surprised. Surprise, surprise, bear surprise. Fuck me. Okay. So let's put there some entries in. 52, 165. Stop loss. We'll probably adjust the stop loss to above the school run bar once it comes. But for now, stop is in the Dow at 52,355. The Nasdaq is at 27,621.2 and 27,791. Bloody hell. Huh. Just 100 points in the Nasdaq. Coming up to support. On the Nasdaq. We'll probably close here. Closing Nasdaq. Close Nasdaq. I don't see shit. Okay. Also close the Dow Jones here. Closing the Dow Jones. So plus 92.9 and plus 56.2. So and why do I always end up getting myself rushed into taking positions? Because there is so much happening in the US markets lately after the open. It's very violent, a lot of volatility. It's supposed to be August soon, you know, it's end of July, a couple of days is August. There should be summer volatility, should be quiet. You know, I have my palm tree polo shirt on, you know, I'm not don't expect a total sell-off here. Close is close enough. Certainly in the Dow looks like there's more juice in the move. Coming up to school run. It's my job as trader to react, right? To this. But do I really want to sell into support on an FOMC day? Guys, I'm as red as this candle is and as juicy as it is. I don't want to sell short again. I'm afraid this might reverse. Did I set afraid? Can't ignore all the preparation, right? And then basic market structure, but we are so gapped down in the Dow Jones. Nasdaq is not a sell anymore, I would say, but the Dow definitely is. Look, we're trading at the lows. Might break. That's nothing, right? Selling short again the Dow. Short again the Dow Jones. On a school run. To trade what I see, and I see weakness. I smell blood. And I'm not prepared for that. I wanted a... Why can't I get a chilly session? Fuck, where can that go? Classic school run. Oh, 80. Oh, 80 is a shit entry, but I took it manually. 52, 270. Guys, I'm for some reason not feeling that one. But it's weak. It's weak. We have to be short. Okay. Flabbergasted, what a bear surprise. Fuck. I zoom in and out and scroll and look left, and I'm just asking myself, where is support? What I'm not seeing. There's nothing. Here's, I know. Here's a swing low. So Nasdaq sprint in an inside bar. At that fast, here you see, those fast candles are over, but we're still on a microstructure here in a bear channel. Seems to be something there. Or are we making new lows? Making new lows. Fuck me. Guys, I'm not sure I want to risk 190 points on that. I move stop loss down. I'm still not buying it. I'm actually short, but I'm not buying that this is such a sell-off. Okay, where was that support? Unbelievable. Let's go straight down. Okay. Okay. Stop loss to break even in the Dow. What did I do? Did I close half? I closed half. Oh, sorry about that. Wanted to put stop loss to break even. I clicked the wrong button. I'm flabbergasted. Okay. Bloody hell. Guys, I will need a 5-minute break. Thank you. So I'm back to a position that is 75 points in profit with stop loss to break even in the Dow. See even some physical gap on my chart. I don't know. How far away is that? Oh, just put that as a target there, and that's it. Guys, I'm completely bear surprised here. I didn't expect that at all. Like I was literally going through a lot of charts. On FOMC days, you see range-bound markets. You see a lot of chops. You rarely see something like this. And that might still, you know, like in the DAX, reverse back up and then establish a trading range that is not choppy, just bounces up and down between the high and the low. But phew! Okay, here's the first attempt of the bulls to print a bull bar after 1, 2, 3, 4, 5, 6 consecutive bear bars. And notice how no bar could go above prior bar high. So that's why, okay, my stop loss is at break even. It's not above prior. I wanted to say that's why if that continues, I'm happy with my stop loss here being so very, very tight for the Dow. Can't make that shit up. Well, anyway. Fucking A. So, good. Come on. Surreal. Might even hit that target, huh? Wow. Let's not be a tick for a tick. That we should get there. Bloody hell. Boom. Okay. Woo! Oh. Good. Wow. Nasdaq also now triggered a school run short. Trading range, selling into support. Nah. I made my points. Job done. Questions time, ladies and gentlemen. Fuck, who knows where that goes, right? So, A shock says, Dear teacher Andy, one additional factor for today's chart. Previous FOMC day chart did not have the active Iran war impact with oil price kept fake low, so only on paper, and realization of manipulating markets by posting messages. Well, I beg to differ. The American president was very active on his own social network, Truth Social, and there were the tariff tweets definitely moving the markets, and we also had there. And we have still an ongoing conflict in Ukraine. So, but I'm not a news trader, right? Like not at all. However, if I see that I'm in a position and then the American president posts something on Truth Social and the market does either change direction or accelerates, to me, that is something that is hard to predict, it's hard to control. So that's an information that I just want to have. Right now, there is no Trump posts. I have an indicator, unless it doesn't work right now, but yesterday it did. Yesterday we were trading here together and Trump was posting 20 messages or so. I sold short a little bit and then stayed out because I thought that was a little bit dangerous and also unpredictable. So, but I don't know, mate, on a 5-minute chart or whatever, if there a macroeconomical deliberations like about oil and Iran war and whatever, if that plays a role here, I don't think so. I wouldn't know how. Anyway, so, but I certainly didn't expect this sell-off. So there is P. Mr. P says, super nice, Andy. Nice flow. Thank you, brother. So, Gangrene asks if it's better for me to drop stupid jokes here or on Twitter. Well, I have a humble Twitter following. I will not promote my own social media here. That's Tom's channel. And yeah, I sometimes make stupid jokes, right? But you know, that's just me. It's also a way of dealing with the emotions that we're dealing with in trading. Also a little bit with the stress. You know, I think what's an unhealthy way to deal with stress? That would be drinking alcohol, right? What's a healthy way of dealing with stress? Going to the gym, you know, cracking some stupid jokes, laughing. That's what I try to do. So anyway, yeah. So here is Lance. Hello, Lance. Welcome back. You asked the question yesterday. Your question today: why do you and Tom not trade ES? So you mean the S&P 500, but Nasdaq and Dow Jones. Thank you very much for the live stream. I can show you that. So absolutely no problem. Indices, US. So here is the US 500. So the ES or S&P 500. And let me put them side by side. So This is a 5-minute chart. So there was a sell-off in the S&P with a pullback, and the second leg there was a sell-off in the Dow Jones with no pullback. But right now this here looks more or less similar. So let's check on a higher time frame, 1 hour. So what I'm trying to convey here is that those markets are highly correlated. They move pretty much similarly. But I pay a 0.4 spread for the S&P, which trades at 7,000. And I pay a 1.9 point spread in the Dow, which trades at 52,000. So for me, those markets, they move more or less the same, but it's cheaper to trade the Dow. That's why. Cost of trading, they matter. At the end of the year, you pay a lot of cash to your broker, even at small size. Huh? Desert Pilot from the United Kingdom. Hi, Andy. Thanks so much for these live streams. I'm enjoying all the profits. Did I hear you say yesterday that you lost 50K on your first trade ever? Not 50, but 16. 16,000 euros. Yeah. I'm not saying that to brag. I'm saying that to warn you. All what you all hear about compounding and whatever, forget all of that. Listen to me, because I've been there. I've made those mistakes, so you don't need to do them. Size is an amplifier. You can't just size up and feel indifferent about it. Trading has a large part of what we're doing here has to do with managing your reptile brain, your impulses, your emotions, getting rid of detrimental behaviors. So stuff that is not so useful, right, to your profit and loss. Yeah, and I'm telling you, when you get rid of that at one lot, it will come back at 2 lots, and at 10 lots it will come back with force, like almost uncontrollably. So you have to earn that size. You have to slowly increase and build tolerance for that. Yeah. So that's why I say that. Not to brag, because there's, if I lost 16K on my first trade, that makes me rather look stupid. So I rather risk looking stupid in your eyes than holding back that information if there is a chance that it might save one of you. Okay? There we go. Tiago pays a lower spread in the Dow, but your spread is variable. So that doesn't mean anything. My spread is fixed. I pay that regardless, reliably. So Felix says, do you know if the situational analysis program which you and Tom are using ever gets released to the public, or at least to us in Telegram? This is the point where I again will post the FAQ for newbies. Where do I have them? FAQ for newbies. So because guys, here, those are the top 4 questions that, here, I've just posted that, right? The top 4 questions that I always get asked, and I can't answer them over and over and over again without losing my mind. So please, if you have a question, just check. It's just 4 questions. 4 questions in the FAQ. If your question turns up there, kindly read that first. And if you still are not satisfied, or if you're still stuck or have an issue, then of course. Right. Also, I would like to urge you to particularly to number 4, right? So this is more an example here. I want you to, because you need to be independent in the market, right? If you have attention spans of a TikTok video, tough shit. That will not help you. So if you are lazy, that will not help you. So all I'm asking is that before you ask me, spend a minute looking for the answer yourself, right? So there might be a pinned post, there might be a handbook, there might be a Google search that you can duct yourself in 10 seconds. Just if you ask me for a link or for whatever, I would need to dig that out for you, right? So I would have to conduct the same search that you are perfectly capable of, right? So that's I think fair, and yeah, I'm happy to answer every single one of your questions. Otherwise, so far I have done that, and I've been very, very patient. So no, gangrene. Nasdaq seems to bounce off traditional daily S1. Never mind. Yeah, it's very much bouncing off. it's very much bouncing off, brother. Look how it's bouncing. Yeah. Never mind you right now. Yeah, exactly. So, so, there you go. Hannes, hello Andy, I have a question. I've read the 600 plus pages PowerPoint from Tom from his resource channel, and there I found a UK 100 strategy that he created. There he brackets the 8th and 13th bar on a 5-minute chart after the London Open and trades it like a school run, long above, short below, with a 1-point offset. Did you ever try trading this strategy on yourself? Because I never saw Tom trading it in the live stream. Yeah. So Tom has developed quite a lot of entry techniques, my friend, and he doesn't share like all or reveal all of his tricks. He's a very resourceful man with many tricks up his sleeve. That particular research in the FTSE, I was even a little bit involved on that. I think I aggregated a ton of data into a nice, more or less nice Excel spreadsheet dashboard, and he put a screenshot of that in the presentation, and yeah, so that with a thank you karaoke Andy there. So I was a little bit involved in that. So there's nothing wrong with looking at old strategies of Tom, and maybe do a little bit of research if they're still holding up the test of time. I did that with the espresso. I kind of revived that. Yeah. And now yeah, now it's back in all its glory. So the eighth the eighth 5-minute bar, I think Tom calls it the 8 ball, and the 13th he calls teenager. Yeah. So in the FTSE, you have the first bar positive, first bar negative. You have the 8 ball. You have the teenager. Nothing wrong with that. Just keep in mind that that is now, I think, 2 years or 3 years old. Check that if that still holds up in current market conditions. Yeah. So nothing wrong with that. Hannes. Hi, Andy asked JB, do you take this trade overnight? This FTSE trade, you know, I just have it there. In the tiniest size. If I get stopped out, I lose $6, right? So I take that trade, and I will hold it overnight, because that's an educational one, right? I don't want to make money on that, otherwise the size is too small. I just want to show. Oh, look, here we're dancing around break even here. Yeah. So FTSE is definitely in waiting mode. And yeah, there is this, you know, FOMC thing there. Who knows? Maybe it's great and the market shoots up and we're back in all-time highs, and then our stop loss takes care of that. Otherwise, if this sell-off here continues, yeah, hasn't reached the FTSE yet, but you know, it's maybe good to be short something. So yeah, I will hold that just to show the principle. That's my intention. Yeah. AJ asks, I wonder how to spot those days characterized by abrupt movements rather than a clear trend. You mean chop? Do you have any advice on that? Usually by the time you realize what's happening, it's too late and you have already lost money. Yeah. That's the thing, right? Nobody knows what's going to happen. There might be signs, like, for example, if you open with a sizable gap down, right, and you're printing bear bars, the chance of seeing continuation is maybe a little bit higher, I would say. Maybe by the time, you know, when you have this and then this on the school run, why wouldn't you sell short there? Even though you expect chop. I would expect chop on a big news night day, but there you go. The grand example that anything can happen in trading, and you have to trade what's right in front of you. So I expected chop. I expected a lazy session. I was really already, you know, my Hawaiian shirt on, you know, was in chatty mode, wanted to crack a few jokes with you, answer a lot of questions, and then I was forced to react to that. But that's my job, right? Can't let that pass. So trading is navigating uncertainty. That's what it is. And so a lot of traders, they spend a lot of time trying to identify those rare trend days where the market moves. Unidirectional, starts down here, ends up here, or starts up here, ends down here, or always opposite, diagonally opposite side of the screen, right? Yeah. But statistically, they happen maybe 20% of the time, so once per week. You might get something like that. It's not little. However, I think in the Al Brooks says, I don't know how old that information is and if it still holds up, but I believe he says that in the first 90 minutes, you you can, with a certain probability, you get some sort of reversal. So since the ES is similar, as I've shown you, to the Dow, very similar, it probably is true for the Dow as well. Well, this is still heading lower. Wanted to get out there. Fuck. Anyway. Oh, that's my wife. Okay. She's not listening in. She's at the pool. Okay, great. Sam, hey Andy, are you trading the FOMC with us or post your entries tonight? Sam, sorry, no, I will not, because believe it or not, Wednesdays evenings. I usually get off from my wife. So Wednesday evenings are for myself. I usually go first to the cigar lounge and then I go to karaoke, right? And I on FOMC nights, I take my laptop and I will trade the rule of 4, but I don't want to really stream from a cigar lounge. That would be inappropriate and could look unprofessional. Could really even, I don't want to be a show off or anything. I smoke cigars for myself. That's what I do. Not to look cool, even though I look very, very cool when I do that. So unfortunately not. But the question 1 in the top 4 FAQs, there's the link to the resource channel, right? You might want to check there if there's a documentation for the rule of 4. That's what I will be trading. So, TH, how about a special fat espresso at 8 o'clock this evening? Yeah, sorry, it's not, money's not always on tap, it's not always on tap. Yeah, there, my friend from, my new friend from the Czech Republic, 18-year-old gentleman, could be my son, has proposed that we visit the gym together. Say why not? If you're in Prague or whatever, we can certainly meet for a coffee or for a gym session or for a cigar, whatever rocks your boat. If you're a trader and in Prague, hit me up. No, it's closed for a small profit. Well done. So there is a gentleman from Switzerland. Andy, could you talk a bit about backtesting? How do you do that? Is that a software that is publicly available or something developed by Tom? In what time resolution? Ticks for minute bars does the backtest run? Thanks for answering and everything you do for us. Greetings from Switzerland. Thank you very much. So backtesting is a thing that I don't do. Believe it or not, I don't backtest. What I do is I call that research. I'm a little bit inspired by what Tom is doing. And the way I conduct research is I look at static charts. I just take whatever charting packet allows me package to go back in time, and I just find charts of the DAX on FOMC dates or whatever. I look at a specific bar and what would happen if we go long above, short below. And yeah, what's the profit potential? Where would I put my stop loss? Or, are there days where I would be happy? Are there days where I would be not happy with that? And I can't just take my eyes off the Dow and it's just falling. Bloody hell. So anyway, that's what I do. This tool here, that's answered in question number 3 of the top 4 FAQ. The price action research tool that you occasionally see us use here is a private tool and is currently not available to the public. Yeah. But what that simply does is it has. This is still going. Fuck, we should be short. Oh, we should be so short. FTSE position is in profit, huh? There you go. Yeah. Okay, I mean, I'm saying that, that we should be trading the market right in front of us, yada, yada, yada. I'm still completely flabbergasted with what's happening here. Can't believe that we're heading lower still. Yeah, well. And because of that, my bias, I just couldn't hold that. We'll go in my book of horror, looking at a lot of profits that didn't materialize. So, okay, captured a large enough chunk of it, but imagine would be in there and instead of taking profit would have added and still be short. That's what Tom would do. Even though that's not little profit, is it? Give myself a break. Did I get out based on structure, on a good reason? I was probably looking for one. I don't know. Anyway, AK, hey Andy, you mentioned on the live stream that if someone is in Prague, they should text you so you can grab a coffee together. Yeah, I did that. I'm open to that. If time allows and we both want to do that, yeah, why not? So, Maximus. Hi Andy, my question is related to learning Al Brooks' price action course. As you know, Tom's strategy is simple, mechanical entries, but later Tom introduced us to Al Brooks and I bought his course. Believe me, I'm struggling hard to learn full of technical concepts. I'm feeling much stressful life in following Al Brooks. Have you experienced this? If yes, how you tackle it? Hey, was it Ed Psychota who said that you will get out of the market what you want the markets to be or something like that? If you want it to be complicated and analytical, then yeah, trading can be that for you. If you want it simple, trading can be that for you. Believe it or not, that exists. However, if you really want to learn price action, really want to study it, it's guess what? If you want to be a doctor, you have to study medicine, and you also have to work yourself through a lot of books and a lot of boring literature. Yeah? Same with business administration, same with engineering, with anything really. Why you should get away with just watching a few TikTok videos, and then you would become a millionaire. It doesn't work like that, right? So if that's what you do, if that is your profession, trading, if you want to trade price action, yeah, then push yourself through that material of Al Brooks and just fucking suck up and then just consume it. My God, for once in your life. I'm too old for that, I studied. I've worked myself through a lot of books, and then later in life I maybe needed 5% of it. But yeah, I've been there. I don't know if you guys have studied or whatever. But this is what we do. This is our profession. So study that material, right? And then later simplify. Simplicity is never easy, right? So, for example, the Italian cuisine, right, if you're a foodie, is very simple, yeah? But at the same time, to pull that off properly is not that easy. Or to make sushi, right? It's just a piece of fish on a little bit of rice. And guess what? When you learn to be a sushi master, you do 5 years rice before they let you touch the fish, right? So study that. God. What can I say? What about some good old German values like, I don't know, discipline, seeing things through and pushing through and not complaining? Oh, it's so hard. Yeah, boo-hoo-hoo. Do you want a shampoo recommendation that the shampoo doesn't burn in your eyes so much? Or was I too hard on you? I don't mean you personally. I mean like everybody who is lazy these days, and probably that is motivated more about the questions where people use me as a search engine, you know. How do I tackle that? I push through, and then I later decide what I keep, what is useful to my trading, and what I just simply disregard. Yeah, that's how I do it. Maximus, my friend. There you go. Joseph says, nice to a picture that... Oh, yeah. Ekran turned some profit and says, nice. Yeah, congratulations, brother. You did well. Travis. Hi again, Andy. I don't recall when, but I heard you say that you only use horizontal lines as supposed support and resistance compared to diagonal lines. I've had to research about it and I'm training my eyes not to see those diagonal lines as reliable as horizontal lines anymore, but I'm having a hard time translating that with channels. If possible, can I know some reasons why you rely on horizontal lines for support and resistance? Maybe I can pick up some gems. Yeah, of course, I got you, brother. So, the thing with diagonal lines is you put your bias in. Where's a good example? And you don't never, because there's no clear rules how to draw them, right? So if you really connect those tops here, what I'm actually trying to convey here. There is an example. So with perfect hindsight, you would probably say, okay, this is a downtrend. Here's my trend line, and here is the trend line break, and I get in with confirmation, yada yada yada. So, and that's, but you are supposed to connect all the tops here, right? So you would have had your trend line break already here. Huh? And there would be your retest, right? So, and then this happened. Boop. You see what I mean? The thing is, we only ever see on a chart what we have trained our eyes to see. And I don't even draw all those lines, but of course I see them. But look, isn't it easier to just say this is a downtrend because we're making lower highs? This high is lower than that high. This high is lower than this high, and we're making lower lows. Low. This low is lower than that low. This low is lower than that low. And then we failed to make a lower high. So that means that this is over. You got one leg down, second leg down, third leg down, and third leg was also shorter, more shallow, right? So that's the thing. And whatever you want to see on that chart is your bias. And if you can draw freely, there are some lines, you will put your bias in that, right? You will put your bias in that. You will draw it in a way that it rather confirms your bias than actual reality. Horizontal lines, however, are objective, right? I would say old highs and lows can become support and resistance. Magnets like a closing price, price is drawn to that. Gaps eventually get filled, not on the same day, but eventually. And so those levels, they prove to be more reliable. Some have more significance. So significance, you often see me, I usually, for myself, I don't do that anymore because I've trained my eyes to see that. But I often mark down the session high and the session low when the market is open, the high and the low. To me, that's more significant than a random swing in there. And the overnight high on the overnight low. So everything in between sessions, right? So that's what I mark down. And then price reacts to that. But of course, if you can surely, if you want to illustrate something with hindsight, just for educational reasons or whatever, not to make trading decisions on, right? Of course, channels do exist, yeah, right? Trends do exist, but as I said, uptrend, higher highs, higher lows, downtrend, lower highs, lower lows. To me, consecutive bull bars closing at their highs, consecutive bear bars closing at their lows, as opposed to a sideways movement, small bodies, long tails, lots of overlap equals chop. It's not so much more there, isn't it? Right? Can go up, down, or sideways. So that's why I think, and also I believe institutions, they also look more at horizontal lines. Anyway, hope that helps. Felix asks, do you think is being aggressive with adding and holding is better than being more defensive and closing possibly too early? I'm currently too aggressive, which is good on trend days, but most of the time I give a lot of open profits back to the market and get a break even or lose. Yeah, here's the thing. So if every fifth day is a trend day and you happen to be in it and you add to it, and at the end of the day you close the whole lot, there is no way in hell that, unless you do something very stupid, that you on the other 4 days that you lose all of that profit buffer. Tom made his fortune by trend following, basically, right? That's why his entry techniques are just that. They're entry techniques. They don't come with exit rules, because Tom is always asking, how much more is in that move. He's always looking, what will the market give me today? Yeah, and then that's a little bit the art. The market is not generous every day. Today I got surprised here, and I still, find it hard to believe what just happened. So exploited a little bit of it, but I wasn't mentally prepared for something like that. So yeah, that's that, right? So that's the art. Survive on the quieter days. Yeah? You can be of two minds, right? So if you want to catch every move, you probably have to treat every school run as if that gets you into that trend. However, I'm maybe less aggressive than Tom, and sometimes more defensive. I have. This is me now speaking, right? This is not me like I don't want to just regurgitate what Tom says. I want to also give you a little bit my own perspective, and my own perspective is that not every day is easy, right? There's some days where it's easy to make money, yeah. Like today would have been very easy to make money, yeah? And there are some days that are just simply not easy to make money. They look like this, right? Unless you're a range trader, a mean reversion trader, then you would probably be very happy. But yeah, so I might as well preserve my capital and my aggressiveness and increase my risk only on those days where it's warranted, where it just flows, right? Sometimes, when you're hot, sometimes it's just like that. Can be the shittiest of market conditions, but sometimes everything you do is just right. So why not risk a little bit more on those days, or when it's clearly going, why not risk a little bit more there? Unless you don't believe it like I did. You know what I mean? So that's where you have to develop your own trading personality. We all are different risk personalities. Not everybody has an appetite for risk like Tom Hougaard. Not everybody is the best loser, even though the ability to take a loss is something we all need to develop. But yeah, there's different types. There's definitely nuance to it. So gave you a couple of ideas. But if it bugs you, like me here, I can't speak coherently now because I always stare at this chart here, that you're not in that move anymore, yeah, then you should probably train yourself to be in and add and then take the whole lot, right? So definitely it's slowing down now, but bears are still in control, yeah. But see, we're getting more and more overlap, and the bars get shorter. So this move might bottom out now, or we get another leg down. It's also what you see here. Do you see this is over? I can finally take it easy now, or do you see, oh, there is more potential? And then depends on if you want to act upon it or not. Huh? Anyway, so hi, AD Samani says, hi, DAX is not falling like US. Tom said it's a sign of market reverse. What you think? Nas at yesterday low and DAX strong by the dip. Brother, don't, when I can give you one advice, don't pick tops or bottoms, right? Buying the dip, buy low and sell high, right? That's probably destroyed more wealth than both world wars combined. I surely believe that. Just rather ask yourself, if this is weak, how much further can that go down? Because markets have inertia. It's like a gigantic steel ball that rolls and rolls and rolls. It's like they say, don't try to catch a falling knife in a downtrend when you bet on a reversal. Don't try to stand in front of a freight train in an uptrend, in a strong bear trend. Don't try to catch a falling knife. The DAX session is over in half an hour. DAX closes in half an hour. Right now, the DAX, let's look at the DAX. What's the DAX doing? I'll give you false information. But you see, the DAX is not doing much, right? The DAX has done something here. Certainly has done something here. V-shaped recovery to previous session highs, double topped here, and now strong bear bar and no follow through. And now we are in a trapped in a sideways movement. And we are, look at that. We are trading just where DAX closed yesterday, right? So that means DAX, look at this. It's just inside this good old trading range here. See that? Maybe in 1 hour I can see that better. Yeah. So. Bum, 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 bum. Yeah. Right smack in the middle. Don't fiddle in the middle. No, DAX is not a buy. Not at all. Right now, the US is in charge. The European markets, they either follow now or don't do anything because the DAX is about to close in 28 minutes. So don't buy the DAX now. So, yeah. Okay. AK says he's from Cairo but happily fly to Prague just for a coffee. Oh, don't just fly to Prague to meet me for a coffee. That would be a little bit. What if I can't make it and you bought yourself a flight ticket and booked a hotel? That would be a little bit. Maybe have an opportunity to meet maybe at a seminar of Tom's or something like that. What do you say? Don't just come to Prague for me. If you want to come to visit Prague and then that's certainly fine, but not just for me. That's crazy. So Jim from Uganda, please reply privately. Yeah, okay. But the gist of it is that Jim says, asks if Trade Nation is a trustworthy broker. I'm with them for the better part of 6 years now, and personally never had issues. If you have issues, contact Trade Nation's customer support, and I'm sure they will work it out. Locke from Germany. Hi, Andy. Hi, Locke. Look, guys. Don't waste your time on writing "Hi, Andy." I receive hundreds of messages, and I can't just, reply "Hi" to everybody, and then you would only follow up with your question. Ask your question directly, or just type it in the same bubble. "Hi, Andy," comma, and then immediately your question, because I will then just say hi back. And then you're still typing, and I'm already at the next and the next guy, And anyway, so yeah, now stop writing me hi Andy. Ooh, this guy's are in love with me. Yeah. I'm okay, I say I'm straight. I have a wife and a child, so nothing against gay people, not at all. I'm just so you know, I'm not from that shore. So Juanma asks, do you track your win rate per trade and metrics like that? Hi, Andy. No, I don't. I don't care about win rate at all. I don't give a flying fuck about win rate and risk to reward and all of that. I don't care. Because how can you do that when you trade discretionary? How can you do that when you trade setups from Tom who don't even come with exit rules, right? I track, of course, what I track this year. That will go in my book of horror. That I was so flabbergasted, I expected chop, and then the market was just selling off. And yeah, I was a little bit in, but why did I close here? Okay, I re-entered here on the screw run. All right, I did that. But why did I close half here? Why didn't I stay in and add it here and close the whole lot here? Why did I close there in the first place? Was that based on structure or was that fear? Why wasn't I still short? Those are the things that I track, right? Those are the things that ultimately that will help me a lot more than my win rate. You know how you get a high win rate? No, I used to be. I told you guys I had a proper career in the German retail business. I was also in e-commerce and also a consultant in the area of e-commerce, self-employed later. So let me tell you about what online shops track. So you have an online shop, right? You sell stuff online. So you have your web shop there, your online shop. What is the metric that most online shops are obsessed about? So they're obsessed about the conversion rate. That just simply means how many percent of the visitors to that online shop buy something, right? So if it's 5%, that means from 100 visitors, 5% buy. So, and you want that number high. You want to increase that number, right? Guess what? How can you increase that number? Sell everything for $1. Sell everything for $1 or even for free. Give people money if they purchase something, you know. Will guarantee you that conversion rate will be 100%. So now back to trading. The win rate of the screw run, because remember it doesn't come with exit rules, right? You can, or with any trade, you know, just trade without a stop loss. Just buy a stock index. It will eventually go up. But the thing is, at one point, you know, you might be in a bear market, and yeah, there will be a massive drawdown, right? A massive pullback. And at one point, you will get a margin call, and your broker will forcibly close your position. And then you probably blow up at that point, right? So that's why the question is always in trading, what do you want out of the market? Do you want to be right? Or do you want to make money, right? So if you enter the school run and just take 5 points in profit, guess what? The bars they have probably in the Dow here, even those here, they all have more overlap than 5 points. So you will probably always get your 5 points, right? Huh? So your win rate would be very high, but your risk would be what? I don't know, 190 points? Is that a good risk to reward ratio? No, it isn't. So you would be right a lot of the time, but you probably wouldn't make money. Yeah. So to me, it's more a philosophy, really, of just doing what the 90% don't do. And 90% lose money, so I want to do something different, right? And that's also what Tom advocates. So if the 90% are obsessed about win rates and risk to reward ratios, I want to ignore that. I believe that just asking a serious question after this session to myself, why didn't you stay short? Why didn't you add, right? Why did you get out here? Why did you take half profits here? Is helping me much, much more than tracking those other metrics. That being said, I'm doing that now for some time. I do also a lot on autopilot. I don't do too much stupid stuff. A beginner might, be better advised by maybe developing a sense for risk, right? And following a more mechanical approach. Yeah, that being said. So, hope that helps. Hey, Locke is a coffee roaster. He's just trading at 10 to 20 times per week. Oh, that's lovely. Think about coffee selling with e-commerce. Oh, certainly. Can do a cooperation, my friend. I love coffee. And I certainly... I'm out of that e-commerce industry now for many, many years. I think I still have a good grasp of the business side, but what they do nowadays, their technology-wise, I'm not up to date. So, Paul just sends to me, hi Andy, hi Andy, hi Andy, hi Andy. Yeah, you guys killing me. Yeah, so Jim, my friend, do you hear what I say? Because I addressed that already. Huh? Then re-watch YouTube. So, okay. Oh, you're roasting a lot of... Wow. Let's talk about that later, my friend. Oh, Log, I have the complete setup there. A lever machine and mill. I can even pour latte art. I'm a coffee guy. I got you. Let's talk about that. Yeah, I wanted a chill session and I got a chilly session instead. Yeah, guys. Oh, sorry, I don't want to give away your names here. Dow Jones might target Monday's gap. Monday's gap? What is Monday's gap? So hey, shout out to my friend Romeo, trader from Prague. Says he can't make it to the cigar lounge today. Oh well, I will make it. Johan, my friend, I don't know what you're talking about. I don't have a connection to your brain, so give me some context, please. So, this is because of Donald Trump. He gave an interview this morning, I think on Fox. Look at oil, says Andre. Okay, you said that an hour ago. You know, that's the thing. I'm not a news trader. I just don't want to. But yeah, something definitely spooked the market here, and now we're in a consolidation. Is it a bear flag before it moves down, or are we finally in that choppy sideways movement in expectation of the FOMC later tonight? I will not take any more trades. However, I will take a couple more questions. Maximus, that's the spirit. Susanne says, on Sunday, 6 p.m. EST, US market opened. The Dow had a big gap, was just filled at 10:42 EST this morning. All right. Good. My win rate comment was Ashok. Okay, so about that, Ashok. Found my win rate comment funny. Okay. Gaurav from India. Hello, Andy. This is Gaurav from India. I have been trading since some time, but I'm not profitable and I'm not being able to build a system. Can you guide me to a good book or process system to build a system? Why do you want a system? Why do you think you need a system? Gaurav, what do you think you need? So you're trading there, and are you putting money on the line? Are you trading with a broker? Are you trading with a prop firm? What does that mean? You're trading for some time. What does that mean? Not profitable. What's your experience? Are you just doing there something? Are you? I don't know. Maybe look. I had a career before in my life. German retail is a very competitive industry, right? There's a lot of players. And I believe in the 2000s, Walmart tried to establish a chain of supermarkets in Germany. And guess what? They failed. They had to leave. They simply couldn't compete with the German competitors who could operate profitably on the tiniest of margins, and the Americans couldn't. Whereas at the same time, Aldi with Trader Joe's and now also under the Aldi brand are expanding in the US market. So if you change industries, if you come from a different industry, whatever you did before in your life, now you're trading. Why do you expect that it is easy there, right? Why do you expect that you don't need to, I don't know, learn anything about that new industry that you're in? You know, how do the markets work? what is a stock? What is a stock index? What are those different instruments that you can trade? What's the difference between CFDs and futures? Who are the major players that I'm up against? Who are the people in this, the leading people in this industry, right? So what methodologies are there to extract money from the markets? Oh, there is price action. Oh, there is news trading. There's that. Okay, price action. Who stands for that? Oh, L. Brooks. Maybe I should study L. Brooks, right? Who can I trust to learn from? Whoever trades live, right, and puts his own money on the line. Oh, Tom Hougaard. Maybe I should check that out, right? So what do you want from me now? That I just come in here and give you a complete system that helps you to be now suddenly profitable like that? No, brother, I can give you a little bit of guidance, but but that can only be you ask a question on Telegram, I give you an answer here, or I type something up. So that must be something that can be solved with a reply or two. Or if it's really interesting for everybody, I can also discuss that here. So I think this might be important for some guys. So I posted here, I believe, an FAQ. In that FAQ, there is Tom's resource channel. Maybe you click on that. Maybe you check out Tom's website. Oh, their resources. Look at that. Aha. So much stuff. Look at that. Here under live trading. Here. Okay, there's the channel. Oh, there's a swing channel. Oh, here's a resource channel. Aha. Here's that trade from chart. Aha, okay. So, why don't you go and educate yourself? You can even do that for free, right? To a certain extent. You can get the Al Brooks books maybe on eBay used. So, and then follow a little bit along what Tom is doing. He's trading live every day for you guys. And now I'm here every Wednesdays. And right now we are in the holiday schedule, so you get me every day this week. Well, but you get what I mean, right? So maybe you start with the plethora of material that Tom has already put together. It's all there. There's hundreds and hundreds of hours of videos where you see Tom being live, where he's on stage, recordings of his seminar, his PowerPoint presentation, research. There is so much so for you to study. And then if you still want to learn proper price action and really academically get an idea about that, yeah, there's Al Brooks. And there's certainly other things if you want to deep dive into the mental aspects of trading. Yeah, well, start with Best Loser Wins, right? From Tom. And there's good old Mark Douglas. There's Dr. Steve Ward, trading psychologist who works with elite athletes, hedge fund managers, high-stakes day traders. So, yeah, hope that helps. Yeah, right? Yeah, I don't want to spoon feed everything to you guys, that you just need to open your mouth, get the spoon with the wisdom from Andi, then you just close the mouth and swallow, sorry, doesn't work like that. I can teach you how to fish, right? Try to teach you how to fish. I can contribute my humble contributions. Yeah, but you need to figure that out for yourself, and then you will never be hungry in your life. Yeah. So, Chris says US 30 sell-off is fake today. Somebody's absorbing and pulling price down. How can that be fake? It's very real. If you were short from up here, and now you're trading several hundred points lower, the profit certainly isn't fake. The profit is very real. So, not sure what you mean, Chris. It's not fake. It's clearly going down, and if you had been short here, you would have made money. And we have been short here, from here to here, from here to here, and here. Yeah? And we made some points. So, thanks, Andy, for sharing. God bless you. God bless you too, Winston. How did you get into trading? I believe I talked a little bit about that the previous US session. Maybe check yesterday's recording. So, a relevant question. Could I share my trade log via Google Sheets? And you could suggest something. You could suggest, yeah. That would be a lot of work, right? To go through your trades, even though your trades are a gold mine. Why don't you do that yourself? You know, if you don't have a software that plots it nicely on a chart, you can certainly just take a screenshot, put it into PowerPoint, and then just put your entries and exits there manually, and then you see what's wrong, right? If there's something wrong, maybe, I don't know, maybe you're making money and everything is good, so then you pat yourself on the shoulder, and it's always something to learn and something to improve, but, you know, always assuming that you guys don't make money. Maybe you do. But if you don't, answers are always in your old trades. So, if we made money today, could we have made more? Sure we could. And the answer is here. Because I closed out here, I opened again, took half profits here, and closed a whole lot there. So, maybe now in that sideways movement, we could have maybe decided based on structure, okay, that's not going anywhere, to go out. Would still be a better exit than that. So, that's the amount of scrutiny I put on my own trading. Tom used to make so many German jokes, so you can make Danish jokes, Andy. Danish joke? I don't even know where Denmark is, you know. It is the tiniest of a country. Not the whole country is smaller than Berlin, you know. So Danish? Isn't that something that you have with a coffee, you know, something sweet? Come on, Danish. So, Caitlin from the USA. Hi, Andy. I would like to know what your advice is for handling the frustration of watching a massive move. I trade the S&P. Leave you behind because you were respecting Al Brooks' rule that first breakouts fail. What do you suggest to do when you realize you missed the initial spike and no clean L2 setup formed? Tja. Caitlin, here's the deal. There is theory and there is practice, right? And the reality of trading is that in practice, in the market, you're under fire. That's like in the trenches. You have to make decisions on a split second. They're that academical stuff stops working, you know, because you have to simplify, because you have to make those decisions rather quickly, at least, you know, on the time frames that I'm trading. So anything can happen, really. And if Al Brooks has put out there some rules, and I'm sure it's based on research, on all of that, but you experience in your own trading that frequently that doesn't play out like that, guess what, Caitlin? You're absolutely free, because it's your money you're putting there on the line, to question that. and conduct your own research, and then act accordingly, right? So that's probably the best advice I can give you, is to be curious and also to be skeptical. Don't take anything for granted, and also edge depreciation is real. Markets condition change. Stuff that worked for a while may not work forever. Other stuff that used to work in the past didn't work for a while, may now work again. Maybe you need to tweak it or whatever. Be curious. Don't be afraid of your own judgment. Conduct your own research. And yeah. Also, when you see, I have this year in front of me, so let me talk about Tom, right? So if Tom is trading for 25 years. That guy has seen it all. In terms of technical analysis, he certainly underplays that, right? He's very humble. He says his technical analysis is good enough or adequate or whatever. Tom is an excellent technical analyst. He studies charts every day, and he has seen it all, right? So, but when Tom is short, he would not get out like I did. He would probably instead he would add here, he would add here, he would add here, he would add here, and he would still be short and stay short, because his mind is always like, okay, how far can that go? And this at that point, that's not always based on research or on structure or on price action or on rigid rules. That is more a philosophy at this point, right? Because if this is a trend day, and that will go and go and go, and the FOMC rate decision is lets the market go down further. Yeah, guess what? He has been in there from up here and adds and adds and adds. That means sometimes he will get stopped out, and then he has those days where he turns losses, and then all people are angry with him. Nobody is praising Tom for turning good profits, right? Everybody points out when he has a big losing day, right, or a losing streak or something like that. But it's that philosophy that enables him to be in there, right? So just food for thought. Hope that helps. Oh, God. Guys, so many questions today. I probably can't take them all. So about that, but we'll be streaming for 2 hours. It was lovely being with you. I hope you study the rule of 4 and give it a go at the FOMC. Yeah, I'm here tomorrow again. If you want, join me. Looking forward. Karaoke Andi.